Facebook reported their earnings after the close yesterday, but the stock is up this morning. How do you trade around this stock? Because it's been down over the last few months, and now it looks like it's starting to see some signs of life. Well, I've got Scott Ruther from T3 here with me. You know, this stock technically missed its earnings estimates, but the market has been focused on their active users and their mobile ads. So how are you suggesting that people trade around this? This one's a hard one to figure out.
Well, it's had two moves this year. In the beginning of the year, it could do no wrong. It went almost as high as 31, 32, and then since last quarter, it's been just grinding lower. This quarter, it feels like the analysts are looking at it with a glass half full versus half empty, because they could have focused on the revenues not being great or even the earnings.
Expenses up 60%. That was crazy expenses.
Yeah, and the user experience. But it seems like every headline's focusing on the revenues around mobile, because mobile is the way of the future. Now, this is the third quarter in a row that they've actually increased their revenue on their mobile platform, so that's a positive. As far as the stock, there are two levels. My guys are going to be looking at 28. 28's been resistance for the course of the past month. I think it's opening right around 28. If it can get above 28 and stay above it for the first 60 minutes of trade, then some shorts might get squeezed, some bulls will get some more confidence, and then we could see better movement out of Facebook in the next few sessions.
All right, if it doesn't do that?
Then it's back in this monotonous range, and it's building what we see as a long-term cup and handle pattern, which is an accumulation pattern. And sometimes it takes a few quarters to accumulate, so the institutions get more confidence that the numbers can increase. But overall, on a macro basis, it really has to get above 31, 32 at some point this year to reward longer-term investors. So if it doesn't get above 28 and hold above it, then it's kind of back in the penalty box as a B-type trade versus an A-type trade. And then in the coming sessions or weeks, if people forget about it and something comes out a little bit more exciting above that level, then traders will look to get more active.
So it's really not a day trader's dream. This is a trader that's got a little bit longer horizon.
Well, you have to know your horizon. If you are longer term, you could buy it probably around this 27.5 and sort of put it in the drawer. But if you are trading it, there'll only be better action if it can get above 28, so you could see follow through. If it can't get above and stay above 28, it's back to being like a choppy, monotonous mess, and traders will look elsewhere.
All right, well, there you go. If you are watching that Facebook stock, Scott's saying, look at that 28 mark. That's the mark you have to be aware of on Facebook. That's Scott Ruther. He's the Chief Strategic Officer over at T3. And I'm Deborah Borchardt with The Street.